We're used to the idea that when we drive a car, we have in front of us a dashboard. And that dashboard is a very useful instrument. It tells us the speed at which we're traveling. It tells us how much fuel is in our tank. When a pilot's flying his aircraft, also he has in front of him a wide range of controls, dials, and funny things that are going on. It tells him his speed, tells him his altitude, tells him how much fuel's in the tank, and it helps him navigate that aircraft as much as a driver with their odometer and all the other instrumentation helps them navigate their vehicle. If we take that analogy and apply it in our business, we have, step forward, something called management reports, which can help guide us towards a positive future. If we don't have those reports in our organisations and we merely rely on those annual financial statements that are produced, we've got problems lying in front of us. In this video, I'm going to outline 3 key things that you need to take into account if you're going to have what I call effective management reports. Hi folks, my name is Mahmood. I'm a business finance coach and tax advisor and founder director of the firm I Hate Numbers. For 28 plus years, I've been helping thousands of businesses like yourself make more money, who doesn't want that, save tax, save time, reduce the stress and anxiety in their business lives, and help them navigate the paths they want to. Plan it, do it, profit are my watchwords. Let's crack on with the video. Now, a management report is not something that's overlaid with numbers. It's a very useful document, and as the name implies, it's a tool that's there for the management of your business, including yourself, to help manage, make decisions, gain insights, and understand what is going on. One key thing you need to do, anyone who's preparing those management reports for you, is to understand the purpose and the objectives of that report. What is it trying to serve? What is it trying to do? You need to have an objective-led report here, and critically, it's there to provide information. Critically, it's there to help inform. Critically, it's there to provide that information so you can make effective, powerful decisions to take your business forward, reduce the risk and any calamities that might befall you. So understand the purpose, understand the objectives. And your different user groups, by the way, will have different objectives set about. The second thing to take on board is think about the audience, think about the consumers, think about those people who are going to be digesting your reports. Within a typical business, you may have people involved at what I call a very senior strategic level. You may have people involved in terms of the operational, the day-to-day running of that organisation, the day-to-day running of your business. Now, all of them play a vital part in your business, but the level of information, what they require to help them in their particular job role, what they need to help them discharge their responsibilities, become more accountable, will vary. So make sure you fully understand the needs of that audience, and I would strongly urge you folks, is involve those stakeholders, a lovely collective term, in the formulation of what is required. Make sure it's a user-led report you're producing, and please don't just leave it to the accounts team to come up with something they think best fits. Accountants, God love them, may not give you what's going to be most effective for your business. What's the third thing? Well, the third thing is to make sure you put in what is relevant for that decision maker, what is relevant for that stakeholder, what is relevant to help them understand what's going on. But it also means do not overload the report with just a bunch of numbers. Now, numbers, I love numbers. I know many people who don't necessarily embrace that. So make sure your content of your report has the KPIs, the indicators on what's important. So don't just look at the profitability, even though it's important. Don't just look at the cash flow, even though that's really vital. But look at things like the customer insights there. Customer retention, how much customers are spending, what their feedback and response is to what you're delivering to them. What's going on internally in your organisation? What's your efficiency like? What's the staff motivation like? Measure the things that are important and make sure they're actually included within that report. You want a whole blend of the non-financial insights as well as the financial insights. Now, folks, that's 3 key things that we've covered there. There is a fourth, and that's about the actual visual presentation of the final report. Now, that's in next week's I Hate Numbers video, so I hope you can stay tuned next week, and I'll show you, in my opinion, what a good management report should look like. It will vary from firm to firm. It It will vary from business to business, but this will give us a nice overview of what I will feel is a good, insightful management report. Now, if you found this useful, I'd love it if you give me some feedback. Let me know what you think. Do you have management reports in your business, or do you rely on that once-a-year production of accounts to help you figure out what's going on? If you rely on that once-a-year exercise, that's bad news, and I would not recommend that. If you need support or help with your management reports, putting together a system, you know where we are, drop us a line, we'd love to help you. And until next week, folks, plan it, do it, profit.